Hi everyone, Juan Finance here. Thanks for dropping by, and in this video we're going to cover the top performing equity funds as of July 2020. So here's a very quick disclaimer. So here are the main features of equity funds. They are classified as high risk, high potential returns, and generally recommended only to or for aggressive investors. And the ideal investment horizon is at least 5 years. So here we have the peso currency. So here we're looking at the benchmark. We have the Philippine Stock Exchange Index, or the PSEI. Now this graph is actually as of July 31. Now 1 year ago, the index is, I think, trading around 8,000 points, and now it's around 6,000 points. And just before the COVID, if you're going to look at here, it's actually trading around 7,000 points. So that's exactly this sharp dip here is actually the impact of COVID-19 pandemic. So here you can see that majority of our equity funds are still in the negative territory. Again, our benchmark, I think it's still around negative 20%. So here we have the BPI, only BPI Invest Catholic Values actually touch the positive territory. That's a very decent return there, 1.80% compared to the rest of the pack here. BPI Invest Infra, that's negative 18. The First Metro Equity Fund, negative 24. We have here PhilM Strategic Growth, negative 24.18, and First Metro Consumer at negative 25.86. So what if you have 100,000 in your portfolio? For Catholic Values, you just earned 1,800 pesos for a year, and for the rest of the funds here, you have negative figures from 18 to 25,000. So these are the details of the BPI Catholic Values, and you can see here that the fund is very much, performing close with the benchmark, and you're looking at, let's say, a 4-year time frame here. So here, this is a very sharp downtrend here caused by COVID. So this is sometime around March, but now as of June, July, you can see here that the fund slightly recovered from that. Cumulative performance. So for let's say 6-month cumulative performance in 1 year, you can see here that the fund is negative. Now it's simply because this report is as of June, but looking at as of July, it already recovered to 1.80% from negative 2.84% in June. So portfolio beta, that's 0.76, and current number of holdings, that's 2. Now here you're looking at the portfolio composition. 94% are equity, and we have the rest 6% cash equivalents. And this is, I guess, the main reason why the fund is performing positive, because it does not focus on Philippine market at all. So if you're going to look at here, majority, that's 52%, is actually in exposure to the US, and we have let's say 9% to Japan. Next we have China, France, and UK. So even though the fund is peso denominated, but your exposure is actually global. So that this is the main reason why here you have the global equity feeder fund. This is a feeder fund. So surprisingly, you're buying here top companies in you know across economies and across countries. We have here Microsoft, Apple, Amazon. So these are the top US companies here, and the rest. So that's why the fund is still performing positive 1.80, despite that the Philippine benchmark is performing in, let's say, negative 20% territory. So for our dollar currency, and here you're looking at the benchmark S&P 500. So a year ago, that's trading around, let's say, 2,900 points, and just before the COVID, it actually traded around or above 3,000 points. So this is the impact of the COVID-19 pandemic. And now it's actually trading that's almost near the this is as of July. It's actually pretty much near to its pre-COVID level. So the S&P 500 actually recovered faster than our the Philippine Stock Exchange Index, or PSEI. So with that, we can see that majority of our dollar placements here funds are actually performing good compared to the peso equity funds. So for Manulife we have 32%, for BDO that's 24%, and for BDO Europe equity feeder that's another 20%, for SB Asia 16, and for Manulife that's 15%. So what if you have $10,000 in your portfolio for a year? These are the corresponding returns. That's 3,209 for Manulife. BDO China, that's 2,480. BDO Europe, that's 2,072. For Asia Pacific, $1,639. And for Manulife Asia, that's $1,549. So here we have the Manulife as our top performing fund. And you can see here that the fund is actually performing on top of the benchmark, and the benchmark is actually the MSCI Zhonghua index. So this is a I think majority of the asset holdings are located in China. So yeah, so this is actually the portfolio, let's say, allocation here. If you're going to look at exposure to China, you have 82%. For Hong Kong, that's 17%. And going back here, for the performance, we have here, let's say a month ago, or 6 months ago, or a year ago, that's around 18.25%. And the top 5 holdings, you have Tencent. This is China. You have Alibaba again here. This is coming from China. And then you have Hong Kong Exchange, AIA, and then you have the Meituan Dianping. So these are majority of these are actually in China. So no wonder why the fund it's still performing good, despite that the U.S. and the Philippine economy is like quite challenged nowadays, because it actually targeted China as its you know underlying asset. So here are our sources. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.